Please do note that we are seeing a record number of cases once again in the Philippines. This has to be contained because the higher this goes, the higher the uncertainty. The higher the uncertainty, more people would want to be in cash. More people wanting to be in cash. It would not be good for our markets in general. And that being said, because of this rising cases, there may be some measures to curb this down via lockdown. Hey guys, so in this video, I want to double down and talk about the latest sell-down that happened in the Philippine stock market, not just in the broad market as a whole, but also to check out some of the stocks that have gone down and give you my insights on what happened, what caused this, and what will happen in the next few weeks and months as well, and what should you do as a stock market trader and investor. So first things first, we saw the market drop below the 6,500 range once again, to see it fall to 6,436.10. And here's what's interesting about it, no? I was watching the markets early on around 10:30, 11:30, and it was just a normal down day for the markets. But what's interesting about it is this. In the final few minutes of the market, we saw a sell down, which is what brought it to where it is right now. And please do note that the value turnover was very strong at 10 billion pesos total for the day, which is part and parcel of when we would call strong trading days for the market. That being said, we saw the market drop 2.94%. Looking at the charts right here, all of the moving average, or we have three moving averages, 20, 50, and 100, all bearish already. There's a sloping downward trending line here, which is confirming that the highs are continually going lower, which is depicting a more bearish undertone. Please do note that ADX and MACD are all confirming bearish movements as well. A couple of things that I'd like to note also is in last Friday's sell down, it's now at the 200-day moving average. It actually closed lower than the 200-day moving average, which it's threatening also to break that once again. I just want to note that we broke past the 200-day moving average somewhere around October 2020, nearing November. Then after that, we saw the market zoom up once again back to the 7,000 plus level. But now, it's now threatening to go below that, although RSI also is showing that we are a bit oversold already. So a couple of narratives that could happen is we could still remain in oversold levels longer. You may see a sell down happen, or we may consolidate at this level. Why was there a sell down? Why did the markets drop? In the past videos, I mentioned that the things that we should watch out for are the vaccine, particularly the rollout, the lockdown, and also consumer confidence. Now, from where we are right now, March 2021, what's becoming a bit evident is there's a lot of anxiety and fearfulness because of the rising coronavirus cases. Please do note that we are seeing a record number of cases once again in the Philippines, massively higher than the heights that we hit last year. So a lot of people have been projecting that this could even go higher as more and more people get tested. And the problem with this is we're going back to where we were before, that a lot of hospitals are being loaded again. A lot of hospitals will be crowded, and that's not something that's very good. Although we have more measures in place now, we have more centers now also to protect people, but this has to be contained because the higher this goes, the higher the uncertainty. The higher the uncertainty, more people would want to be in cash. More people wanting to be in cash, it would not be good for our markets in general. And that being said, because of this rising cases, there have been reports. I can make another video about this when we have more concrete details on it, that there may be some measures to curb this down via lockdown. So I don't know what it is. I've been hearing MECQ, soft GCQ, or whatever iteration that is, that there may be. But please do know that every time we lock down, instead of going forward, we go backward. Instead of creating measures to somehow stimulate the economy further, we're creating measures to somehow go back and lessen the transactions. If you've been following my videos, I've been talking about economies made up of transactions. More people spending, the wheels of the economy will continue to turn, because that means another business is earning. But the more we lock down, we will limit that once again. So add a layer also of, as we lock down, sentiment across the region won't be super bullish towards towards our market. And please do note that the narrative on how you would analyze it is this. A lot of our peers in the region are doing much better than us in terms of reopening the economy, in terms of the rollout of the vaccines, and above and beyond that, giving people a sense of having life back. Not 2019 levels, but it's much better already than 2020. Whatever we're seeing right now brings us a step back that 1 year after the coronavirus and the lockdowns happened, instead of moving forward, we are moving back. And as you all know, investors do not like uncertainty. The more uncertain things get, the harder it will be for people to somehow plot their investments. So here's my take in all of this. Based on the data that I have right now, March 21, 2021, it looks like this so far is negative sentiment for the short term, but I'll update you if this prolongs, meaning we would see larger cases spike, we would see longer lockdowns, then there might be a larger fundamental impact on the market, or at least on listed companies as a whole. But if this is something for the short term, meaning downward short term sentiment, downward bearish sentiment based on the fear and the uncertainty, then here are some things that you could possibly do. But please do note, whatever I share right here, please do your own due diligence. Please study. Please do not buy, sell, hold, or avoid the stock just because we talk about here in YouTube. It's your money. It's your responsibility. You have to take the time to learn. Contact your financial advisor for you to be able to have a deeper understanding on how it will fit your financial plan and goal and strategy and investment technique. If you are a position trader, the narrative and the technique is if you are holding on to a stock that's in an uptrend and then suddenly already they're out of that uptrend, especially from the ones that started since March, that could already be a take profit signal for you. But for stocks that are already in downtrends, that there's considerable confirmation from MACD, ADX, the moving averages, or it's already building lower highs already, then please do note that it would be more prudent to stay in cash right now while they are in downtrends. It would be prudent also to take profits on the ones that have escaped their particular upward trending movements. So that's it from a position trading perspective. Please do note that as a position trader, the name of the game is to follow the trend. As a position trader, the name of the game is if the trend is not in your favor, then stay out of it first, then come back again to fight another day. Now for quick traders, same thing, same narrative. Definitely for stocks that are breaking down, please do not catch them while they're falling. It would be nice, it would be interesting to see them subside first and start to consolidate and build a support, or at least hit a specific support level. So I don't know what stocks are in your watch list, but my suggestion, go through them. The ones that just broke down, it would be prudent not to buy them first. The ones that are currently breaking down, it would be prudent also not to buy them first. For the ones that have dropped massively, that are in support levels already, that are showing you from an RSI perspective that they are oversold, that could be candidates for you to watch out for, especially for those who attended our Stock Smart sessions. Please go back to our lesson on the RSI cross up and our setup for that. Every time they have been sold down, are in support levels and have shown us areas on how we're supposed to pick them up. So that's how I will look at it from a quick trading standpoint. It will be case to case still, depending on what stocks you are watching, because it totally differs. There are some stocks that have broken down already. There are some stocks that are just breaking down, and there are some stocks that have already been sold down previously and are hitting levels of support. So name of the game is just watch out for the ones that are bouncing back already, or at least consolidating on those lower support ranges. For those who are investors, nothing much has changed from what I mentioned over the past weeks. The name of the game is you will have to deploy patience to buy the ones that, number one, will give you a good dividend yield. I've created videos that some of the stocks that are giving you high dividend yields are Globe, AREIT, Meralco, SPC, PLDT, especially the telcos. I think they've been sold down massively last week. So that could be areas for you to be able to position, especially if you like a higher dividend yield. Please remember, the lower the stock price, and if the movement primarily is brought about by sentiment. It's brought about by people just selling lower. Think about it, on lockdowns, telcos normally do better. Telcos are not as hit as compared to other brick and mortar establishments. Also, utilities are somehow no more resilient, similar to the dividend stocks that we mentioned earlier. Lower price movements, sell downs, allow you to have a higher dividend yield later on. So that's the name of the game, especially if you are a person that's into dividends. Now, that being said, because of the sell down that's happening also, it allows you also to pick up certain stocks that they may not do well, no, over the next few months. I don't know how they will be considering how the lockdowns will go, but it's you positioning. But the key ingredient is you need to deploy patience up until everything starts to recover. So just go back to the good ones, the ones with very, very large market caps, the market leaders. It could be from the property development sector, which is massively hit. It could be also from the banking sector, which also is hit. So study them. The ones that are cheap, the ones that are good, could be stocks that you could position into. And here's the thing, don't put everything in one go. Store cash so that should there be drops, you can still tranche it and buy more. We don't know how low this would go. We don't know if last sell down last Friday could be it already. But what I want to share with you is this. We can't control how the markets will go down, but we can control how we tranche and how we deploy our capital. So the best thing that you could do is buy the good ones, buy the big ones, buy the ones that will be resilient and will pivot and innovate even in the midst of this crisis, so that when this crisis is over, because you positioned earlier, it allows you to be able to ride the upside when all of the uncertainty is out. So please remember, maximum uncertainty, maximum upside, maximum sell downs. It gives you also the opportunity to position well, wait, and then when we come out of this pandemic, those companies will come out better. This is all a conviction play, similar to what I've been talking about for US markets and cryptocurrencies. In the Philippine markets also, it will always be about how fully convinced you are of what you're buying, because my conviction cannot be your conviction. You cannot buy a stock just because I'm buying it. Always enter, always position, because it's something that you've studied. No matter what other people are telling you, they cannot dissuade you because it's something that you took the time to be able to study, and that's not something that I can tell you to do. It's something that you need to take the time to study. But if there's one thing that I do know is, in the midst of uncertainty, there will always be opportunities. You have to tune them based on what your timelines are and what are the risks that you're willing to take. And I'll say this, the more uncertainty that we will have on the next few weeks, the more volatile markets will be, the more downside pressure there will be also. And that's where your financial planning should be so important, and that's where also your conviction on what you're buying will also take precedence above everything. So that's it for now. I hope that this is something that added massive value and content for all of you, because that's all I want. That's all this channel is all about, to give Filipinos a chance to learn more about investing, because I really believe this, that investing is the game, that the more you know about investing, the better financial decisions you will make. And it's better to invest with the possibility of downward volatility than buy stuff that does not matter at all, that won't help you in the long run. If you want to know more about me and the seminars that we will have, we are having a technical analysis course this May. It will be via Zoom. The link is in the description below. And I have books that are available via Shopee if you guys want to order. Everything is in the description as well. And everything that you need to know about investing in the market, the basic videos that I have that are available in YouTube, and brokerages that allow you to trade US and cryptocurrency markets, they're all down in the description below as well. So I hope that this is something that added value to you. And if you want more of this, appreciate it if you can press the like button, so it helps the YouTube algorithm push this video further. But above and beyond that, if you can share this to your friends, because I really believe that financial literacy and information is something that every Filipino should take part of. So that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.